Hey everybody, Sive is here with the Forex Peace Army.com. Let's update our view on the gold market. So here we have just minor changes. This is probably understandable in the current situation. Market participants are preparing for payrolls report. And actually, recent ADP numbers were really bad, and now just investors are a bit frustrating what actually to expect. Is overall pulse, Raiders pulse, and other big banks pulse suggest that this might be somewhere around 73,000 maybe in payrolls, but market is preparing for worse. And actually, in the current circumstances, it even could increase the scale of the possible rate cut. So if payrolls will be really bad, so it might be increasing of the chances that the cut will be for 50 basis points. But at the same time, in recent few years, we see the break of the relationship between the ADP numbers and the payrolls numbers. So, and majority of investors prefer to not risk and just wait for numbers and not make some decisions on the trade before that. On the daily chart, we see mostly the same picture as yesterday. The market stands in the same range, shows the reaction, showing reaction on the 35.77 target. And on the lower time frames, the same patterns that we discussed recently stands in progress. So on the fall time frame chart, you could see that we've got the close below the 3x3, close above. Now, if we'll get the close below on the fall time frame chart, that will be double repo sell pattern, which is particularly could let market to drop further and reach 34.80 or even slightly lower level, 34.40, to retest the previous stops. But this might happen only probably if the payrolls will be really strong. So, or at least market will make the decision on profit taking by some other reasons, more maybe because the payrolls will confirm the 25 base point cut from the Fed. It will come in 2 weeks, approximately in a week, since the 17th of September. So, and that might trigger the profit taking as well, if even payrolls will be somewhere around expected levels. The profit taken might be not just because of the payrolls itself, but in general that it supports and confirms the expectations that market have. Market will not have any more reasons to suggest more rate cut in September, and that could trigger some booking on the market. So that's what we intend to keep an eye on. On the hourly chart, the idea of the triple to sell pattern is also working. So you can see market actually start forming and actually has formed. But here we do not have any intention to take short positions. That's why it is relatively simple for us to just watch what is going on. And if even payrolls will be bad, the market will jump up. Well, that's will not be strategy for us. It's because we are not considering taking short positions. So we don't care actually what will happen on the top here. The one thing that we would like to get is just retracement that we talked about and those patterns to work. And in this case, it will be a great chance to consider next long position taking and acceptable levels. So we prefer to not make any trades until payrolls numbers will be released, because we think that it doesn't worth our actually money and our risk. And we do not have any habits to make the bets on the data releases. At the same time, all the things that we said before remains in place. If you still suggest that it's a good idea trying to take the short position here based on the double repo, on the triple to sell pattern, and you do not scare of the possible data release and volatility, well, we can't forbid you to do this. Maybe this will be a really great trade. It's difficult to say, but our base case scenario is to wait for a moderate retracement and then in a quiet atmosphere just to take position or just to assess the overall environment and whether it's a good moment for another entry in the gold market. That and towards what we have here.